Hey, good morning, everybody. Welcome back. This is Multifamily Unplugged. It's Saturday morning, and I hope you are just really enjoying your weekend. No matter what you're doing, if you're still working through the week and trying to get some extra stuff done or get caught up, or if you're spending time with family and enjoying your weekend time. Glad that you're here this morning. And listen, if you're new to the show, if you're listening in for the first time or even the second time, and somebody had invited you, please make sure that you thank them. I think this morning we're going to get into some grassroots nuts and bolts about raising capital and maybe even a platform that might be able to help you if you're a capital raiser. If you're an investor looking to invest in multifamily or in some other real estate asset, we're going to maybe talk a little bit this morning about why you should and why the timing is perfect right now for investing in real estate and where we're at in the market cycle. So, hey, one thing that I want to talk about before we get started though is cycles. I always say there's no geniuses in this business, but there's just market cycles. And depending on where you're at in the cycle is where you're going to be, how you're going to be able to participate in that cycle and what kind of wealth you're going to be able to create for yourself through that cycle. I remember years ago, Gary Keller wrote a book called The Millionaire Real Estate Investor. And one of the questions that always stuck out with me was, can you time the market? And I've invested in real estate when interest rates were high and interest rates were low, when there was a Democrat in office, when there was a Republican in office, when the market was good, when the market was bad. And you know what? You can always find that space that you can make money in. And it comes down to you and you taking action. We can learn all these things, but if we don't take action and we don't move forward, it doesn't help us. It doesn't help our financial future. It doesn't help build our portfolios. So I'm here to see what I can do to be of help to you, to be of service to you, and help you grow your real estate platform, your real estate business. Hey, I'm super excited this morning about my guest, Christian Sadler with PREI share out of Salt Lake City. We're going to talk about capital raising and money, and they have an event coming up later this year. We're going to talk about that. Before we get started, as always, I'll ask, please give me a little bit of love. Like us, love us on social media. Follow us on Instagram, follow us, subscribe to us on YouTube and any other platform you'll find us on. But we're always bringing great guests and bringing great ideas and tips. In everything that we roll out there, if you found one good tip, one great nugget that would help your business grow, where would you be by the end of the year? All right, let me bring Christian in. Hey, good morning. How are you?
I'm great. Thanks for having me, Mike.
Yeah, you bet. Good to see you. Super excited about this morning's episode and where we're at in the world and what's, what we're looking at going forward, because I think that we're in one of the greatest places that, I've ever seen. I've been in real estate 30 years and over 30 years. And I think that we're going to just see some great opportunity in the next coming months. So.
Yeah, I would have to agree with that for sure.
Hey, listen, as we get started, one question I always ask my guests, and I always say I'm going to write a book on this, and one of these days I'm going to, but, in one word, what best describes you personally and professionally?
I think though you actually said a word that sticks out for me, which is service. I feel like I try to put myself into service situations as much as possible. And I think this came from not knowing exactly, where I could add value. So just, showing up and serving others has provided tremendous opportunities, both personally and professionally. So between, just the way that I network at events when I was younger, of just showing up and asking if there's anything that I could do to help, to the different charities and philanthropy that I've been a part of, helping the homeless here locally in Utah. I feel like I'm a very service-oriented person and leader.
Yeah. Hey, and I always like to ask, but Have you always been that way, or do you think that that's something that over time you kind of adopted in your life?
Yeah, definitely. I was not always that way. I was kind of a troubled kid back in the day. So
Me
very
too.
much self-focused, if you will, in a lot of those scenarios. My dad passed away when I was 10 years old. I became angry at the world. I started drinking when I was very young. Went to the hospital 3 times with alcohol poisoning before the age of 16. Got in a lot of, just fist fights and other things, in schools and outside of school. So no, in the early days, I was not very service oriented. But when I, locked in on the decision that I was going to be a business owner and real estate investor, I started meeting people. I started getting around people and, learning from mentors, and they all pointed me towards personal development. And through personal development is where I became very service oriented, and then also just realizing that if I could show up in a way, to serve somebody else in whatever small way I could when I didn't have much as far as experience or knowledge or resources, it reciprocated back, even if it was just in the pieces of gold that would fall out of their mouth with their advice as I was listening to the conversations that would happen around me. So no, I think it was learned.
Yeah. Yeah, I think that over time, we change, right? We grow and we evolve. I can relate to the troubled kid thing, and you know, dad dying at an early age, and it's kind of funny. I'm listening to you, and I'm like, wow, you know, a lot of correlations there. But I think we all grow over time and learn our lessons, right? And what's interesting, and I love this, is that you can't let your past define your future. So all that stuff you did before was just what the lessons you were learning to get to where you're at today. And I think
Absolutely.
that's great. So, hey, why don't you let's jump in here a little bit. Why don't you take a minute or so and give your background, talk about who you are, what you've done, how you got to where you're at today, and what you're working on.
Sure. Well, I kind of mentioned just, being troubled youth and, not having a lot, raised by a single mom of four, she never did. I never saw her date or remarry, obviously. So, with that, we didn't have much. And I paid attention to the families that had lifestyle, because as you're a kid, that's what you're thinking about, right? Again, that self-focused scenario of like, okay, these guys have the boats and the four-wheelers and, all the fun stuff. And I noticed that all of those families that had the lifestyle I wanted owned real estate. They in one form or fashion. And so I decided, believe it or not, 16, 17 years old, somewhere right around there, that I was going to be a real estate investor. And I set myself out on that path. And, I figured it out. It took some time. I went through a lot of programs, about the late night TV programs and everything else. And finally found a group locally here in Utah that had some mentors along the way. I quit my job at 22 years old, went full-time real estate investing. Now there was lots of ups and downs, through that. So it wasn't just a linear path up by any means. I stayed in that world. And, after the 2008 crash, because that was very early in my career, I kind of got stuck in this mode of flipping, which I never got into real estate in the first place to flip properties, but I ended up, getting into doing, pre-foreclosures and wholesaling and flipping. And I think I stayed in that mode for way too long. But anybody who does that at some point takes a step back and says, man, if I would have just held on to, 10%, 25% of those properties, think about where my net worth would be. So I started making the shift, towards buy and hold real estate, commercial real estate. Started buying up these, small town rural commercial properties here in Utah. Had some great successes with that. Helped some small business owners step in and build out their business and ultimately buy the properties from me. Of course, I would have loved to just hold those properties forever, but right about the time I was making that shift, the credit markets changed. So you guys all know what happened, here, 2019, 2020, into that range, where all of a sudden they started shifting the credit markets and how they would lend on commercial real estate. And all of a sudden all my equity was trapped. So I started making a shift again and started, changing, my direction. At that point, I got my real estate license, and through all of my years of doing real estate investing, I also worked within the world of education, teaching people to invest, which put me in the space where I was doing public speaking, and I was doing television and radio. So I had a media background, and I plugged into a brokerage that put me on television almost every single week. And that's where I was brought into PREI Share. Is a friend of mine who had known me for years and years. His dad was my co-founder, Michael Anderson. Now, Michael Anderson had done $7 billion worth of real estate at this time. He was a big multifamily syndicator, so right in your world. He was doing it before it was cool, right? Before there was any 506c offerings or any of that. He was doing data-driven real estate syndication. And he sold his company to his business partner a few years before I met him. And so he decided he was going to retire. You know, he's in his 70s now. And then very shortly after he decided he was going to retire, he realized that he doesn't know how and he doesn't want to. You know, he really enjoys building businesses, bringing value. So he came to me and some others because he wanted to shift some of the things that he didn't like about the world of real estate syndication. The biggest one was the lack of liquidity for the passive investor. Typically, somebody gets into a transaction and they're kind of stuck. And obviously that was very prevalent in the market that we were in because the credit markets were changing, and all of a sudden 2 and 3 year deals were turning into 5 to 7 year deals, and payments were being delayed and everything else. And so we launched the Listing Hub, which is a place where you can list your existing positions in real estate syndications, find a private buyer, and ultimately get the liquidity you're looking for. Now, I'm going to try to shorten the story as much as possible, but what happened there was we started a fund at the same time, the PREI Share Liquidity Fund, which was designed to buy these secondaries at scale. And there's lots of reasons for that we don't have to go into now, but we had a lot of interest. We used our team who had a lot of digital marketing experience, and we went to market. We had a lot of interest. We had about $35 million in verbal commitments to that fund with no product to buy, which is only a good problem for a very short period of time. I will tell you that. Everybody says they want that problem, but again, it brings its own challenges. But it did push us into the space to realizing that there's a unique market segment out there, which is the passive accredited investor. And they don't call themselves passive accredited investors. They don't call themselves accredited investors. Most of the time, they don't even really think of themselves as investors. They are, doctors and dentists and tech professionals and on and on and on, the demographic. So we figured out that we had a niche in being able to find those people online and attract their interest into different offerings. So through this process, we had been building our, network of sponsors, real estate syndicators. And some of those guys saw what we were doing and said, can you do that same thing for me? I'm having a real challenge in raising capital compared to previous years. And so we took a look at that and we said, yeah, I think we can do that. First campaign we launched, we just flooded this guy with leads. I think it was like 700 leads that we had sent his way. He was looking for $3 to $5 million. He had multiple investors that came through that initial campaign that were $3 to $5 million allocators in and of themselves that were looking to put money to work. And so we figured out that it worked well, but also there were some challenges there. Flooding him with a bunch of leads when he didn't have the systems and everything else in place, didn't necessarily give him the best use of those leads. So we've refined our processes over time. And that's one of the, the big things that we do still to this day is we help people with their full go-to-market campaigns. We also have a list now, that we've built a database of over 6,000 accredited investors. And so we use that as a way to get the word out and help people boost their campaigns around their projects. So those are a couple things that we have going on right now. And then in addition to that, my co-founder, Mike, he's always been very tech forward. That's how he became, this data-driven syndicator that was able to build this $1 billion portfolio of real estate. He's always taking the market segments that were, essentially slow and moving them into market segments that were growing. And up until now, there was not the computing power to really run the analytics that he wanted to run with all the different data segments. So now that technology has advanced, he has a team actually that are working on quantum computers to do quantum analytics around commercial real estate. and they're pushing some things, some really cool things forward in that realm. And then on the other side of things, and I told you I was going to try and shorten this, so this is where I am. On the other side of things, my Neanderthal brain came in here and looked at what we were doing, and I said, you know what? In addition to these accredited investors that we have that are always looking for, secure offerings that they could be a part of where they can grow their wealth, we now also have this huge list of non-accredited investors that we don't really have much to offer them because of the laws and the rules and SEC regulations. So we just launched our own fund in the private lending space. So a very secure way to grow wealth, and where our Reg D is now filed. We're officially able to collect money from accredited investors, but we're also launching a Reg A fund. So we can take those non-accredited investors and give them a secured way to grow their wealth in real estate, backed by first lien position, with great loan to values. So those are kind of all the initiatives that are on the plate right now. We're always doing, something to expand and really I think where we sit is we're in the middle ground between the passive investor, making sure that these people have really great ways of doing due diligence, because many of them just don't do due diligence, right? So we think it's important that they have really good ways to, vet their offerings and the people that they're working with. And then on the other side, we have our real estate sponsors. The only way to have good passive investments out there is to have the active investors that are out there creating those opportunities. So we create a lot of tools and things for them to grow, their portfolios and continue to create great offerings. And that's where we sit.
Yeah, that's awesome, man. Great initiatives, that's for sure. So, you mentioned something early on in, your history. You talked about, you've been in real estate a long time, and your rise up was, wasn't right away immediate, but it took time, right?
Yeah.
And I always find this interesting because you and I seem like we come from the same mold, and we understand that it takes time to grow and takes time to get to the next level. But a lot of people today look for that instant gratification, that quick rise, that hockey stick straight up. When they don't get it, they quit. So, if I bring that into perspective, if you look back in 2021, 22, there were a lot of people in the multifamily space. There were a lot of people, you were multiple offers on deals. Deal pricing was going way up, way up, way up because there were so many offers. And where are those people today? They're out of the business. They're gone. They went to RV parks. They went to self-storage. They went to do something else, went back to their old career because they didn't have that instant gratification. And I think that the mindset that you have to have in this business far outweighs anything else. You can have skill, but you have to take action when you have skill, but it's the mindset that continues to keep you going. Talk to that a little bit.
Yeah, I mean, it's so true. And when the market is doing really great and it's really unique the way that it was for a good period of time, right? Then everybody just thinks they're a winner because, they're making great decisions when in fact it might be, market conditions that are helping them win. So those people that can win when the market is shifting and changing, I think are the ones that are that you want to be invested with, that you want to be with long-term. And it does take a certain mindset. There were a lot of people that we were talking to in our early days 5 years ago that had been in the business for 30, 40 years, they call themselves kind of the gray hairs, if you will, right? And they were sitting on the sidelines. They were choosing not to invest because they were, analyzing and making the decision of which way they would move forward. And some of them are now getting into some really great, offerings and whatnot that they're creating because they were willing to be patient. But also, like you had said, there's always a place, there's always a segment of the market where you can make money. And, having that mindset is so important. So the most successful people that I know are constantly working on their own self-improvement, right? Reading books. I've got a whole, library here that I still cherish, even though I rarely read traditional books these days. I'm usually listening to them as I'm out, commuting and whatnot. But books are you get the chance to learn from other people's bloody nose, so to speak. You get
Yeah.
the opportunity to hear, the mindset of somebody that has achieved what you want to achieve. And then if you're lucky enough, like I have been, then you get to be in the same rooms of some of these folks that have far exceeded, what your level of success that you're, striving for is. And if you can understand and you can ask the questions behind, what do you do on a day-to-day basis? Because oftentimes that's what people are asking. It's like, oh, well, what time do you wake up? What is your morning routine? The tactical stuff like that, I sure it's important, but I think that the mindset behind why and how somebody acts is so much more important.
Yeah, absolutely. So I know you guys have an event coming up in September, I believe.
Correct.
And why don't you talk about that and who should come to that event?
Sure. Yeah. So last year was our first annual event. It was the Capital Raise Forum. We did it right here in Utah at a world-renowned racetrack. So Mike was always kind of a racetrack guy. He had all the cool cars, and we just wanted to bring that back to the fun aspect of growing wealth. So we're doing it again, except this time we've changed the name because there's a little bit different focus this time. Last year was very much focused on the capital raiser, right? So we had four speakers that had raised over $1 billion in equity in front of the room. We had some just incredible people from all over the country that came in to learn about the ways of raising capital, what's working, the changes in technology, and we mix in a lot of fun with that event. Well, this year we're bringing it back, but we want to bring both segments of our audience. We want to make sure that we also bring those passive investors. So there's kind of those two audiences that, maybe there's three audiences that would want to be there. One is the people that are looking to raise capital. We're still going to have a lot of things built around raising capital, what's working, here's some tools and things that you can use. We're even going to have one day where you could, sign up to pitch your offering in front of the crowd and get immediate feedback and potentially even raise capital right there in the room with people that you've been hanging out with and, racing go-karts and other things with throughout the event. The second segment would be the passive investor, the people that are looking to allocate capital, that want to come and meet those that are at the forefront of creating offerings, that want to learn some of the things that we've built to help them do better due diligence, and understand, how to protect their wealth while they're growing it. And then the third segment would be, we always have a segment of people that serve this world of commercial real estate and syndication. And so, the attorneys and the title companies and cost segregation companies that may want to come there as sponsors so that they can network and also share what they're seeing. What we teach in front of the room is very important at these events, but what's more important and what we're focusing on at a much higher level this year is the personal interactive networking. So we're going to have a lot built around the networking aspect of what we're doing. So real relationships are built. And then, of course, every single day, we're going to do something as a group that is really fun, for the most part, on the racetrack. So whether you want to jump in a drift car and, slide sideways next to next to another car, bumping doors, jump in a go-kart, or, possibly even, jump into a supercar and get a true race around the track.
Well, that sounds awesome. I think that what I like about what you're talking about your event is that you're incorporating some fun, which is, like fun on steroids, and you're going to be able to do a lot of networking and get to know people, because there's a lot that happens in building relationships in that atmosphere, right?
Yeah.
You can go to these seminars, you can go to these events, you can listen, you can meet people in the hall, but it's that other component, and that's what I like about what you guys are doing. I think that's a great initiative, a great event to be having. So good for you. I'm actually looking more forward to it today than I was last week. So
Awesome.
let's and just tell people, and we'll put this in the show notes, but tell people how they can get a ticket for that event or participate.
Sure. So if you just go to privateinvestmentforum.com, You can go right there. You can see about the event. There's, tickets right there. If you're wanting to be a sponsor of the event, just reach out to me personally, and we can talk about, what that looks like. Or and that includes if you're wanting to, pitch in front of the room. If you've got an offering that you're raising capital for, or you will be in September, then we'd love to chat with you about that. But privateinvestmentforum.com is the easiest way to get more information.
Awesome. Good for you. And now I know you have another program also, and I wanted to kind of get into this a little bit with you. You have another program that helps the operator, the sponsor and operator raise capital. Do you want to talk a little bit about that and what that looks like for, I'm an operator. I want to hear what you guys have to offer. So.
Sure. Yeah. So kind of what I mentioned is, we have both our internal network, which over 6,000 accredited investors that are looking for offerings that we, mail out to and text out to about different projects that are coming, through the pipeline. But then also our digital marketing team can take you to market, full scale, fly in on site with you, film with your team, help you craft and create your story, persuasive language around, what you're doing and what makes you unique, turning that video content into organic and paid media, and then actually running that paid media and using the analytics to continue to improve your cost per lead. We do all of that. And so it ranges in the different offerings between whether you're just wanting to send a blast out to our network or you need a full go to market. And, it depends on how much capital you're looking to raise. We can really structure a program that is tailored to you and your offering. And our goal is not to just give you leads. And again, I told you, we've refined that over time. We don't want to just have people that are somewhat interested in, passive investments getting on your calendar. We want people that are specifically interested in your offering, that are already, have been able to indicate that they are accredited, and they're looking for what you have right now that you're currently putting out there. So that's kind of the goal of what we're doing. And we want to help you build relationships with these folks. So many people come to us because they're in immediate need. We helped Avoca Properties, for example, raise $5.8 million in under 60 days from the time that we launched their ads. We help them oversubscribe their raise. But what's more important when you really think about what we do is you're building your database of investors. And so there's lifetime value of these folks that you're connecting with. So if you've got a team, we're very diligent on, before we ever launch a campaign, we want to make sure you have your systems and your tools in place. You have an investor relations team that is going to build relationships with these folks, not just try to pitch them an offering, if you will. So that's kind of what that is. And we have something unique right now that we're doing where, Mike Anderson and some of the folks that are in his network are actually fronting the cost for people's launch of their campaign in exchange for equity in the projects that they like. And so for some people, coming out with a, $50,000 up front to launch their marketing campaign might not, fit into their current budget, but we have people that can actually front some of those costs or all of those costs in exchange for equity.
Wow, interesting. Well, and then do you guys run the paid advertising campaigns as well?
Absolutely. Yep.
And let's talk about that for a minute, because I find that a very interesting space, right? So there was a time a couple of years ago, there was a company out there, probably well known. You probably know who I'm talking about, GenRev, and they did a lot and they were really good. And then all of a sudden it was like somebody shut the spigot off. And if somebody clicked on your ad, they all of a sudden got 20 different ads from different sponsors that GenRev was running, and they kind of burned out the system. What are you seeing in that space today? Are you seeing that it's better marketing today? What makes your marketing efforts stand out versus, 2 or 3 other groups that are doing marketing at the same time?
Yeah, sure. I mean, yes, definitely. It's become more prevalent that people are online running ads, but I don't think we've burned the market out whatsoever. There's still plenty of people that are out there looking, and Here's what I think, people got a little bit spoiled with is oftentimes, like you said, they might be seeing an offering and there wasn't a bunch of other offerings. So they might be seeing the same offering multiple times, right? What we found is, if somebody online shows interest in anything, in this particular case, we're talking about passively investing in real estate, they are going to see 10 other, offerings that may be of interest to them. So how do you gather their attention quickly? How do you move them into the process of building a relationship? Because, quite frankly, with the way technology is going, us as operators being, really smart and, being able to, make market selection decisions and everything else, I think that's all going to be taken over by technology for the most part. And so really, the only place you can stand out is in your ability to build relationships and in your character, right? In showing that in the good times and the bad, you are investor centric and you make sure you do what's right for your investor database. And so quite frankly, I don't think that by any means the market is too saturated. It's just about being able to adapt with the market. So we used to be very, very much almost solely focused on Meta. And Meta is still probably the leader. So that's Facebook and Instagram, right? Where you're running ads.
Right.
What we did is when we started seeing a lot of these changes, we started expanding out. So now we're running on Facebook, Instagram, Google, YouTube, X, TikTok, LinkedIn. We run, when we launch a campaign for somebody, we launch on all platforms that they want to be on. Of course, we're not going to do anything if they just don't like that, particular platform, but we're going to launch them everywhere. And then we're going to look at the statistics, the real data, the raw data of, where the leads are coming from, what the cost is. And then we're going to scale up or down based on what's working. And in every package that we, run for somebody, we always include a large amount of ad spend for the first 30 days so that you can see exactly where the money's going, exactly what results are coming in from it. And then we can make a decision whether it makes sense to continue to run campaigns moving forward on any of those platforms.
Awesome. Well, we definitely need to continue that conversation a little bit. So one question as we start to wrap this up this morning is, where do you see the market at right now? And more importantly, where do you see the market going over the next, few months?
Yeah. So where the market at is right now, I think we're finally starting to see some stuff flush out of, all of the, there was supposed to be blood in the streets for the last probably 5 years, right? And we haven't seen nearly as much as everybody thought that we would see. There was a lot of extending and pretending by the banks, and they wanted to protect their interests, so they weren't, just taking over, many of these properties. They were usually working out some sort of situation as long as the operators were, coming to them with a plan of how to work those out. So that's one thing that we learned through these last few years is, if an operator could, build a solid plan, they might have to use a capital call or other resources, pref equity to get through it. But, they found ways to get through it. But I think you also seeing some of those people that are getting to the end of their rope and they're just, they're not going to be able to hold on, or they're bringing in opportunities where they're, there is some equity in there and they're bringing in, some other players to help them get those done. So I think you're going to see, and I shouldn't say we're going to see, we're already seeing more deal flow, happening. We're seeing, more properties being, bought and sold. And so that's a good thing that you're seeing movement in the market. But this is also one of the most unpredictable markets that we've probably ever seen. Even, Michael Anderson himself, who is always, staying in front of the market and, doing data analytics on what's happening and where it's going. We just have such a very much an unpredictable market between the politics and everything else that's going on right now, credit policies. It's very hard to explain or determine where things are going. So I think that investors want to see more protection. They want to see more conservative of underwriting. They want to see that you're looking out for the different potential scenarios that are going to come about and that you're building strategies around that. And that's kind of what I would see is we're starting to see some really unique things come into the market in the strategies and how people are approaching real estate, and different market segments that weren't as prevalent are now becoming almost mainstream. And of course, they're now then getting rolled up into, almost institutional style investments where we didn't see them in the past.
Right, right. Yeah, I think you're right about more deal flow. Awful lot of deal flow lately. And the other interesting dynamic, and I always get a kick out of this, is you could tell when the market is tougher to get a deal done in, or for a broker, because I'm getting broker calls, 3 to 5 a week right now.
Yeah.
And when they're busy, they don't call, right? But they're calling. And so it shows that we're at the end of that cycle, that shift is coming, and it's going to happen. It's happening and going to happen. So listen, this morning has been great. If you had to leave a few thoughts here for investors at the end, and really kind of directed to the private investor, the passive LP, what would you say to them today?
Now is the time to really do thorough due diligence on anybody you're working with and on any program or any offering that you're looking at. So take the time to ask the questions. And sometimes that's not all public. So if you can get the opportunity to talk to people on the sidelines of the organizations or the offerings, and get some real straightforward conversations of how do these people act and operate when things are not all roses and cupcakes, so to speak. I think that's one thing that is really important right now. And then, who do you have that's being really creative? The interesting thing about this market right now is everything's in flux. And so if you're working with an operator that's just waiting for the deal that's being placed in front of them, and the offering just works at its current price and they don't have to do anything, I think that's few and far between. And if it's such a great deal, why would it be scooped up by one person? It's probably has different people coming to it. But when you approach a deal in a different way, we had an operator that we were working with, we were helping them in their capital raise, and the numbers were good, but for the asset class, I think investors wanted it to be better. And it was because it was, they were still trying to take care of the owners that had kind of messed up the deal, took a lot of the equity out of the project and left it in a situation where it wasn't great. But the bank was in the process of taking it back. And so while we never want to see somebody, lose in this situation, and we want to take care of them, sometimes that's not always the option. So at some point in time in that transaction, the conversation shifted from dealing with the owners to dealing with the bank themselves, and ultimately that made that a much more attractive offering, and they got it funded almost instantly as far as raising their equity. So you got to get creative. You got to find out workout situations for everybody involved, and if you can do that, I think there's lots of deals to be had.
Awesome, thank you. Well spoken. So hey, tell people how they get a hold of you.
Yeah, first of all, PREI share, we're pretty much everywhere. So if you just use the @PREISHARE, PREI share, really easy to find. And then I'm also easy to find if you spell my name correctly, which most people don't unless I spell it out for them. So just @Christian Sadler, CHRISTION. That's where everybody gets it wrong. So Christian with an O, and then Sadler with one D, SADLER. Easy to find online. I'm very active on, the different social media platforms. You'll be dealing with either me or somebody on my team that's monitoring those. But if you reach out, I would love to connect with you. And if there's anything that I can do to serve your audience, I would love to do so.
Thank you. Hey, Christian, I appreciate you being here this morning. You certainly had a lot to share. And your knowledge obviously is, helped keep you in the game for sure. So looking forward to, learning more about you and your company and how we can work together as this market cycles out. And I would encourage investors and capital raisers to get to your event here in September. I think it's going to be phenomenal, and there'll be a lot of opportunities. So I'd encourage people to find out more about that and get a ticket for that event and get out to that. And if you are somebody who's looking to maybe invest, or, looking to be in a debt fund, as Christian talked about, reach out to PREI Share and see what they can do for you. But thanks for being here today. And I really appreciate your time and all that you had to put in. Thanks,
Thanks so much,
Christian.
Mike. It was great to be here.